Good afternoon, everybody, and welcome to a new month and a new hot stock panel. My name is Glenn Tompkins. Welcome to our YouTube page, and to all of you out there in Facebook land, welcome to you as well. So I'll be able to see chat in both so we can answer any questions that you may have. By the way, if you can hear me and everything is coming across loud and clear, please let me know in the chat, preferably with VV Nation, to let me know that I am coming across loud and clear. Sitting side saddle to me is Joey. Joey is my producer, and right now he is making sure that everything is going on in the background, so if there's any problems, let me know. That's right, Jake says, ooh-wee. That is the VectorVest Jockey Club war cry. Ooh-wee, baby. That's what we use to make sure that we can make some money in the market. Thank you, Joey. All right, so I can now see all of the Facebook chat. I can definitely see all of the YouTube chat. And as always, when we do our hot stock panels, if you're brand new to the channel, please hit the subscribe button, hit the bell icon so that you'll be alerted when new videos like this live happen. And of course, if you like the material that you see, hit that like button. Let everybody out there know what's going on over here at VectorVest so we can help them make better decisions in the market. I'm joined today by two of my most esteemed colleagues, Steve Chappell and Jim Penna. Wave, folks, they can see you. There you go. Jim's waving. Yeah, there you go. So they're going to tell you a little bit about themselves before they come on with their stocks today. We have a watch list of 7 stocks, the hottest stocks from the hottest industries. And is that from the hottest? Well, it's the 7 stocks to...
There's something behind you.
There it is.
Oh.
It's the 7 hottest stocks, long-term stocks to invest in right now. All right, it is. It's all about hot stocks. It's all about hot stocks. But we're going to take a look a little bit at what's going on. Did Joey do it? That's why Joey's my producer, to make sure everything is good to go. Man, high five, Joey. That's all right. I got you. And, you know, that's what you're here for. There it is. The hottest long-term stocks to buy now. That's the hot stock panel for today. We're going to take a little bit of a look or peek at market timing because here on YouTube, everybody wants to know what stocks to buy. It's always about the what. Here at VectorVest, we give you the why behind the what. We're going to give our insights on the stocks that we're looking at. We're going to tell you when to get in and, most importantly, when to get out. But we're going to help you to time your trade. So when I start off today, I'm going to start off in the market in our homepage of the VectorVest system, all right? And if you look at it right now, you'll see from our traffic light, so to speak, Jim, you have the mouse. Move it all the way down someplace. You have that. There you go. Thank you. We have our traffic light into the market by way of the color guard that tracks 3 of our market timing indicators. We've got a lot of red. We got a lot of yellow. And this is a time where you can get caught up in news. You can get caught up in the buzz. And this is where VectorVest, as a software, as a system, will help to keep you focused and keep your head off a swivel. As we look at today's market, the market was down today. But look at this. Market's coming back. NASDAQ is now in positive territory. The S&P 100, not the 500, is in positive territory. So what do you do on a day like today? This is a good day to sit still, but we're still going to point out some stocks in your favor that you can definitely take a look at. All right, so I wanted to just give a cursory overview of what's going on in the market so that you can make better decisions as well. So I'm going to go to our list of stocks today. Here's the 7 stocks that we have for you today. I'm going to have 3 stocks. Steve is going to have 2 stocks, and Jim is going to have 2 stocks. But the biggest thing about this is we're going to give you our insight behind the stocks utilizing the VectorVest system of analysis that's by far better than anything out there. And yes, I've worked for the company now for 17 years, but there's nobody on the other side of this camera that can tell me different. Our analysis of our way of analyzing stocks is better than anything out there. So here's our 7 stocks. I'm going to start off with the 3 stocks that I've picked. And my top 2, 1 is 6. How does that happen? MATX. Did somebody take that out? MATX. All right, that was my last stock, and that's good. All right, so here's the 7 stocks, and out of the 7 stocks, like I said, I have 3, 2 of them in the transportation space, and I think that as the world starts to open back up, by way of truck, which is ODFL or Old Dominion, by way of ship, which is MATX or Matson, I think that that's still a good play as companies, or actually as countries, are going to need to get imports of goods. So these are the 2 main ways to get that, and whether, in the United States, in and of itself, how do goods move around the United States? A lot of times by trucks. When you're out on the highway, you see trucks moving hither and fro about the highway. So I think that those are 2 good plays. And then I've got my 3rd play, which is Sherwin-Williams. Sherwin-Williams. You ever remember the commercial? My Sherwin-Williams. All right. I don't know how old you are, if you remember that or not, but I do. So I'm going to highlight all 3 of these stocks and very quickly go through why we are as good as we are with the indicators that we have. Every stock in the database has a value, what we feel the stock is currently worth. Right now, Old Dominion is trading at $290 with a value of $267, slightly overvalued. Just because a stock is overvalued doesn't mean that it's a bad stock. It just means that people are willing to pay a premium to own the stock. Matson, on the shipping side, $83 with a value of $120. So the stock is currently undervalued. Our mantra is to have you in safe, undervalued stocks that are rising in price in a rising market. And then I also look at Sherwin-Williams trading at $291 with a value of $250, slightly overvalued. Now, let me tell you why a stock being overvalued is not an altogether bad play. We have an indicator called relative value. It looks at the stock's long-term upside potential as compared to a AAA corporate bond. We use this to determine whether or not the stock has got upside to outperform the market over the next 1 to 3 years. And what we're using for the essence of the market is a AAA corporate bond. You buy a bond, after it matures, you get all your money back with a little interest. It's not a blow the doors off the market trade, but it's a safe investment. When I look at ODFL on that scale in relative value between 0 and 2, it's above the value of 1. ODFL shows me right here that it should outperform the AAA corporate bond by 50% over the next 1 to 3 years. Matson should outperform that AAA corporate bond by 64% over the next 1 to 3 years, and Sherwin-Williams by 28% over the next 1 to 3 years. This gives me some insight as to the upside potential on the stock going forward. Next indicator, relative safety, it's an indicator of risk, and it looks at the consistency and predictability of a company's financial performance. Does the company make money quarter over quarter, year over year? Now, Jim and I have had conversations just because it makes money. It all depends on, what they make, what they sell, which he's absolutely right. But nonetheless, all 3 of these companies are above 1 in that ranking of 0 to 2. The one, Matson, though, is at 1.09. It's not that it's a bad company. It's a safe company, but maybe not as safe as ODFL or Sherwin-Williams. The next indicator, though, is a technical indicator. When we look at relative value and relative safety, those are our fundamental indicators, whereas relative timing is the technical indicator. It looks at the company's short-term price trend, all right? And what that tells me is when I analyze a stock, we look at the insight of fundamental analysis, but we also incorporate some technical analysis in it to give you a nice, well-rounded view on the analysis of the stock. Above 1, the stock's in an uptrend. Notice that ODFL and Matson are both nicely above the value of 1. Sherwin-Williams, though, is pretty flat. RT tells me that before I even have to look at a graph. Out of the stocks that I've picked, 2 of them are buy recommendations. Every stock in our database gets a buy, hold, or sell recommendation. 1 is a hold. Now, when we look at the analysis between the fundamental and technical, we have a master indicator called VST, stands for value, safety, and timing. On a scale between 0 and 2, when these stocks are put into a watch list, the stocks that have the best combination will automatically rise to the top of the list, and the one that has the worst will be at the bottom of the list. Notice that all of the stocks that we've chosen today are all above the value of 1. So on that combination of value, safety, and timing, we've presented to you a listing of really good stocks out of a universe of over 9,000 stocks that you can look at. Another thing we look at, earnings. Earnings is our forecasted earnings out 12 months. Why is that important? Because I can look at the earnings per share now, our forecasted earnings, and see that by this time next year, this is where earnings should be. And that gives us a nice big overview that is earnings rising or falling? We also look at earnings growth rate. How are they managing or growing their earnings? We also want to make sure that that number is in double digits, that they're growing their earnings in a nice double-digit range, and all three of the stocks that I have are. Now, I'm going to look at one other thing, because when you're looking at long-term stocks, hottest long-term stocks to buy now, dividends can play a role, all right? Does the company go up? So I can look at price appreciation, but does the stock or the company pay a dividend? Notice that all three of them do. This is what else makes us different. We have an indicator called Dividend Safety, excuse me, on a scale between 0 and 99. How safe is that dividend that will either stay the same or grow? All right, so now I'm looking at Dividend Safety on that scale between 0 and 99. How about Old Dominion's got a Dividend Safety for their dividend of 80 cents at 99. On Matson at 74, and on Sherwin-Williams at 97. Any value above the value of 50 is good in regards to looking at dividends. So those are the main indicators that we're going to concentrate on today, at least that I am, and I think my colleagues may or may not look at those as well, but nonetheless, they are there from the standpoint of analysis. Remember, we go more beyond just the what, the stocks, we go into the why, and the analysis within the system starts to present to you the case of the why. All right, now that these are highlighted, we've used the VectorVest analysis. I'm going to right-click these stocks. Let's go look at a stock graph, and I'm going to put all of these on a one-year graph. We're looking for long-term stocks, so I'm going to put these on a one-year graph going forward. So now, as I look at Sherwin-Williams, the stocks graph is going from the bottom left to the top right, a little bit more in the face of some volatility. But when it runs, and when it pulls back, it pulls back a little bit, and then it runs higher. Right now, it's going possibly through that same scenario again of pulling back, but look at that nice run coming back up. I'm going to change the graph layout to my swing trade layout. There we go. And now I'm going to take off a couple of things. This is still presenting more of the why. Bottom left, top right, a little volatility, but when I'm looking at the graph, that's what I'm looking for. Bottom left, top right. What else I'm looking for? Since we know that earnings, if you have not heard this from us yet, you will. Earnings is the engine that drives a stock's price higher. So even when I see these pullbacks, I'm looking at the rising earnings down on the bottom. That tells me that this company still is got positive earnings, it's growing, and the earnings growth rate re-emphasizes or emphasizes that analysis as well. So coming off of this pullback right here, I've got a 20-period exponential moving average right here. I like that most recently it's going above it. It's not only doing that, it's breaking through a level of resistance at 288.39. I've got a good run possibly to this level of resistance of about 310.21 that I could jump on. If you're not in it yet, this could be a good early entry right now. Especially, well, let me back up a little bit. It all depends on what's going on in the market. And right now, we're going through some topsy-turviosity. That is a Glenism in the market, back and forth, back and forth, back and forth. But if the graph can present you with an opportunity to buy, you may want to take it and just be careful with it. All right, and just be careful with it. But I like the nice pull up above the level of the 20-day exponential moving average and follow through from breaking above that level of resistance yesterday, again, with the rising earnings and the rising earnings growth. I'm also looking at volume, because volume is conviction. As the stock's price is moving up, I'd really like to see volume picking up as well So my entry would be about now. I'd look at getting in 12 cents higher than the high, but I do have the headwind sitting at 310.21. That's a good little piece of money that I can make. Once it gets to that level, it touched before it pulled back. Maybe you at least take half off the table or close the trade out. But from a long-term perspective, I do like the bottom left, top right, moving higher. All right, that's the first stock. It's the first stock. Nail says, topsy-turviosity, going to trademark that. You can't trademark it. It's my word. You can't trademark it. All right, so we're going to start with Jim. Jim, let's go get your input on the stock.
Yes. Hi, Glenn. Thanks. And yeah, Sherwin-Williams, great company. Not a lot for me to add here. It's a dividend aristocrat. I like that you pointed out dividends. It's going to continue to move. I'll just comment, and I'll comment on my stocks and probably Steve's. We're talking about long term, right? That's our reason to be here. Stocks for the long term. So yeah, Sherwin-Williams in my portfolio for both growth and dividend and safety, without a doubt. Dividend aristocrat, high RS, I believe. What's the RS? 1.45?
1.45.
I'm sold.
Oh, okay. Steve?
Glenn, click that little button down there in the bottom right that says 10Y. So that'd be 10-year, right?
Good googly moogly.
All right, so that paints a better picture. Yeah, you want to own Sherwin-Williams. We talked about the engine that drives stock prices higher. Look at the EPS line running through the chart there. This is the very definition of a ruler stock. This is the very definition of something that I'm going to talk a lot about later on. I don't think that there is a better company in the stock market that I've seen at making money year after year after year after year after year.
That's a lot of years.
You can go back further if you want.
I know, but I'll stick with the 10 years.
Yep.
Steve was right on point when going.
This pullback is a buying opportunity.
I agree with that, and I think that the most recent push above the 20 might be a good opportunity to take advantage of it.
Glenn, do you have the dividend information on the in the control panel there?
I can put it on if you like.
I was just curious.
Wouldn't you just want the dividend paid? What you want?
Paid is good. Paid is good.
There it is.
Yeah. So.
All right, which is right here, and it's just growing and growing and growing and growing, and you gotta love it.
You don't have to do it, but if it was 25 years, you would see that same staircase growing because they've grown their dividends. I want to say for 80 or 90 years. So.
All right. So good input. Thank you guys both for that. All right, let me put this back onto a 1-year graph. Let's go to the next stock in my list, which is Odfl, Old Dominion. How many times have you been out on the highway and you've seen an Old Dominion truck? A lot of times you see them. There's a lot of them. I got the dividend on here as well. Bottom left, top right. Recently, just like Sherwin-Williams, bouncing off a level of support, just crossing above the 20 exponential moving average. I've got a high here of 304.15. It hit 1, 2, 3, 4 times and pulled back. If that stock can break above that level of resistance like it did back here, the stock's got really good upside. Like it did back here, really good upside. So I'm looking at like it did here, really good upside. So I'm thinking that right now it could be setting up. There's the rising earnings growth. Another good stock, not as volatile as Sherwin-Williams, but definitely a steady growing stock. Jim?
Yeah, same concept here. You've got, again, an RS of 1.48. What do you got on 1 year there? If you go back, I'm sure the dividend, the yield isn't all that great. But again, you kind of comment, I was thinking of what I was going to say and you came up with it, is that, again, we're talking long-term here. I don't know that I need a 20-day moving average to tell me when to get it. I see it, but you pointed out very nicely where that resistance was and it broke through, but it's done it for the last year. And if you went to 5 years, it probably continues to do it. And we know, well, for me anyway, what convinces me is the relative safety indicator and RV as well, but relative safety and the earnings growth.
Excellent.
So falls right under the umbrella of what we're trying to get across today.
Stephen?
Yeah, and there's no need to necessarily throw all your capital at it right now. You can just ease into that position over time. Takes off some of the concerns about the potential head and shoulders and things that we're seeing in the stock market, some potential for maybe some further slide before things heat back up again. So start small and build over time.
All right.
Yep.
Let's go see. Can do day trade in the U.S., says Glauco on Facebook. The answer to your question is yes, we can. And actually, we have a trading room called the Jockey Club that we do every weekday, Monday through Friday, from 9 a.m. until 10:30. So yes, we can. All right. The last stock in my list is Matix or Matson, MATX. Bottom left, top right, a little bit more volatility. COVID comes in, countries not accepting much in the way of imports, but that's on the rise right now. So I like it from the perspective that goods have to get around the world. But I have seen time and time again, and Steve can back me up on this, from the Jockey Club perspective, when transportation ship works, it works. When it doesn't, it doesn't. But I'm looking at the 1-year graph, bottom left, top right, little pullback. But and I like that Jim says you really don't need to have to put the 20-day exponential moving average on it. But I like it as a gauge to know when it's time for me to pull back, take profits off the table, and wait for a better buying opportunity. Only from that perspective. Currently, right now, a little bit of a sideways move. I'd like to see it get back up to the high of 87.99. Right now, it's at 83, but currently above the 20-day exponential moving average. I'd like to see it get out of its own way. I like it specifically for the idea that, and China is going to be the biggest mover of transportation ship as they start to take on more imports. Now, there is another downside to transportation ship. One, there's a lot of backlog at ports of ships coming in, and the BDI index that looks at the bulk dry billing system is up. A lot of people are paying a lot of money to get goods imported. But guess what? What else are you going to do? You're going to have to pay it. These shipping companies are set to start to make a lot more money, especially with that information being out there. Love the earnings growth rate, and this one does pay a dividend, and it most recently bounced up as well. Start with you, Jim.
Yeah, I'm going to go back to what we're talking about, longer term trades, or not even trades, investments, right? That's why we're here. So I'm just, again, I'm not saying you picked a bad stock, but there's 20 stocks I'd pick for my long-term investments before one with a 1.09 relative safety number.
I got you.
The swing trading aspect, again, I'm not saying it, it's not could be a great company, could double, my luck, it'll double in the next month, and you can laugh at me on the next hot stock panel. But, from the long-term view, I just, the transportation, you're right? When transportation shipping works, it's an amazing industry, and it runs, and it's great to be on those side of the stocks. So in that sense, I think it's probably a great stock to track and trade. But for a longer term look, I would take mine over yours.
All right, well, and that's fine. I want the input. That's fine.
I'm joking with you.
That's all right, Steve.
Ditto.
Okay.
What he said.
All right, and that's fine. And the beautiful thing about this is that you guys can make your own decisions. We're giving you opportunities of stocks that we like, but you guys can make your own decision, and that's the why. And I like that. I might get a little pushback. That's okay. That's quite okay. And understand that all three of us may invest a little differently. All right, I'm going to close out of the graph. And then I am now going to turn it over to Jim Penna, who is now going to utilize, and Jim, you should still have control, correct?
It looks like I do, yes.
All right, so introduce yourself to YouTube, let them know what you do, and then go have at it, man.
Thank you, Glenn, and thank you, everyone. My name's Jim Penna. I see a lot of familiar names in the chat box. I'm the manager of retirement services here at VectorVest. Been here now about 15 years. So Great to be here on the Hot Stock panel again. And thanks to Steve and Glenn for allowing me to be on here. Let's talk about a couple of the stocks, the two stocks that I chose. I started with JP Morgan. And one of the reasons that I've chosen JP Morgan, I could walk through, Glenn gave a great definition of what all these mean. But if I come to JP Morgan, all of our proprietary numbers are just fall in line for me. Relative safety is not quite up to that ruler stock level of 1.4, but I'm certainly fine at 1.3. Relative value is strong. The comfort index is strong. The growth rate, right? It's trading at only about 14 and a half times earnings right now. And financials, one of the reasons I chose JP Morgan, I was going to choose Bank of America. There's a handful of regional banks that I would choose because of the financials, because interest rates, overall, again, if we're talking about long term, I believe, the industry itself is going to get better and get stronger because the financials and the banks like higher interest rates. And I believe that's, in a macro sense, that's where we're going. So I chose JP Morgan also because just, I'm not going to bet against Jamie Dimon either. And so that's why I chose JP Morgan. If I scroll over, if it lets me, it wasn't this letting me do anything here.
Click again. You got to click the screen. Click the screen.
I'm clicking it rapidly. It's not doing anything.
All right. That's interesting.
All right. I just wanted to, I was going to scroll. There it goes. I guess it takes a little while to click in there.
No, I did it. Go ahead.
Where's the dividend information? Did we go too far? Maybe. I just want to show the dividend as well. So the JP Morgan pays a dividend. The yield right now is, where's the yield right now? 2.37. So I like that as well. The dividend safety, as Glenn said, anything above 50 is favorable. It ensures that payout ratio is favorable from earnings to the dividend. Can the company continue to pay it? So I like that about it. If I put it on a graph, there's no real, there we go, that worked better. There's no real, that should not be on there. There's no real, catalyst on the graph that I would point to other than, you know what? Let me do this. There we go. There's the graph I wanted to use. So I don't have a lot of the information on here, but I did put support and resistance on here. And, it does have support down in this area, which would be around, I don't know, around 162.50, wherever that number would be there. I don't know. I guess we're all on the screen at the same time, so mine's not working. So my mouse, but
there
you see that resistance. But again, I'm sorry.
It's at 163.
Okay. Okay. So what I'm looking at, it's above that support that I see here, and so I would allow that as a good time to get into the stock. I mean, again, if I'm talking long term, it's really a lot from an industry idea here. Again, I was going to put Bank of America up there. There are others. There are regional banks, but I just think that JP Morgan is a good pick for a long-term hold. And so, there's nothing really here I'm going to analyze on a shorter-term basis on the graph. If I go to a one-year graph, we know the stock is overall in an uptrend. And again, given the macro view, I think it's got nowhere to go but up. So that's my first stock. If you guys have any comments.
I'm good with it. I like it from the bottom left to the top right. It just recently broke through that nice level of resistance that was sitting at 165. Broke through, came back, tested it, found another level of support. Now, with yesterday's activity, hit a new one-year high. Stocks rising. And I like your analysis in that with the rise in interest rates, banks are going to be moving. There was three stocks when preparing for this. There was three industries that were moving. We had the banks, we had energy, and we had tech. Those are the three industries that are rocking and rolling right now. So I think getting in early enough on the banking side, I think, is a good play. Steve?
Yeah, just to give some folks some insight, thanks for being here. Obviously, we want to make sure you guys have some takeaways, particularly those that may not even have VectorVest. If you go back to the viewer, to the watch list there, Glenn, and go back to the dividend yield, It's coming in at 237. Reason it's so safe. Now, there's more to it than this, but just to give you kind of a metric to take with you. If you look over at the earnings yield is 692. So anytime the earnings yield is at least 2 times the dividend yield paid, you're in pretty safe water. This is nearly 3 times, right? So that's how you're going to walk away with an 82 score there. And that's also why Old Dominion is so cheap, because they could probably afford to give away a little bit more, which is why they got a 99 safety rating. All right, back to you.
Yeah, no, that's a great point on the dividend side of that. Yeah, I think an underused indicator in our program, if you're especially if you're looking solely for dividend stocks, but
Yep.
the dividend safety number is very important.
And you only find that in the VectorVest software.
Yeah, that is a proprietary number. The other thing I just wanted to point out quickly is if I scroll this back here, Glenn had talked about price to value. So we do have an undervalued stock, by the way, which I like to see. I already mentioned it's trading at just over 14 times earnings. I love that part of it. So there's room to move to the upside. And so we just, whoops, I didn't do that. Who did that? Did I do that?
No, it's okay.
All right. And then so I'll go on to my second stock here. So just as JP Morgan had an industry based forward-looking, positive outlook on it. I chose Micron Technology. For those of you who are in the retirement coaching group, you guys know this stock well. You know that we sell covered calls. Right now, I've got a collar on it. We've been just buying puts on it when we have to. But again, this goes more towards the idea of the industry. And Steve, Nvidia is yours, right? So you'll talk more about that. I'll leave that to you, but that's one reason why. The other reason why is because of the VectorVest analysis of the stock. It's an undervalued stock, clearly. Relative value and safety, you can't get much better than that. Yes, RT has been struggling because the tech industry is down. The VST is strong. CI, suffers along with, the industry and the movement of the stock. But you've also got very strong earnings per share. You've also got a stock trading at 9 times earnings, right? The stock's not going anywhere. It's struggling, much like Nvidia, I think, did with the chip makers, the shortage, the supply chain, all of those things that are going on in the industry. But again, if I'm looking at a long-term look at these things, then I'm looking at a stock like Micron. So if I look at the graph now, it's certainly not going to look great. So again, this is no swing trade. If you want to call it, a great buying opportunity here, that's kind of where I'll lean. We do have support here, whatever number that is. Like, it's hard for me to see it on the screen there. Is that 68 and change?
It looks like 68.86.
68.86, I believe. So there, listen, there is some support there. And will I worry about if it goes below? Yes, but that's why, not to shift gears here, but that's why I have put options on the stock. I own the stock, but I also own long put options on it through this movement. But it wasn't long ago, and the stock was trading at, $90, $95. So, I attribute a lot of this to what's going on in the industry. And for the longer term, this stocks that have these kind of numbers in the VectorVest program in the tech industry, I think are going to do well. So that's what I'm looking at. So I broke it down individually. Again, there are 10 other tech stocks I could have chosen. I thought about just coming on and doing the, being Warren Buffett and just putting Apple and Bank of America on here for my long-term holds. Those are Warren Buffett's 2 biggest holdings at Berkshire Hathaway. So I'm kind of going along that same idea with Micron and with JP Morgan, also which Warren Buffett owns a ton of as well. So those are my stocks, industry related for the future, where I think some of these industries are going to take us. Again, we're talking about longer term. The fundamentals are great. The PE ratios I love them. And just overall, I think these are stocks that are only going to get better over time.
I think that the industry is getting beaten up, but this could be a good opportunity when it does rebound. Just like you said, the fundamentals are there on the stock. There's no ifs, ands, or buts about it. And the chip shortage has messed with MU, AMD, Nvidia. It has. But I think that tech being as beat up as it has been is also going to present you with a great buying opportunity to hold for the long term. Stephen?
Yeah, the stock is literally trading about half intrinsic value in VectorVest. In other words, I believe we feel it's worth about $120 a share, if I'm not mistaken. So even when it was running wild and crazy up to 95, those prices were certainly warranted then, and that just means tremendous upside in the future. I'd be patient here. You might get an even better price. Looks like it is trading at a relative floor right now if you just look back to prior swing low support. So on an up day, yeah, I mean, trading half its intrinsic value with those kinds of numbers in VectorVest, it's a great pick.
Awesome. All right. Let me get us back to the viewers. Thank you for that, Jim. I like your picks. I think you did a good job, man. Even if you did beat up my shipping stock, that's all right. I'll deal with you later. All right.
Just the only reason I beat it was for the objective. I don't think it's a bad stock, or it could be a great trading stock.
I know, man. I'm just messing with you.
I just don't want to hurt your feelings in front of everybody.
You hurt my feelings behind all of the people's backs, though. You do that every day. Every day.
I try.
I'm going to bring Steve Chappell in. Steve, before you come on, or as you come on, introduce yourself, let everybody know what you do, and then take it away, man.
Hey guys, hopefully you can hear me. My name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. I just made my 20-year mark this past Monday was my 20-year anniversary, so it's been quite a ride.
Congratulations for that, bro.
Thank you very much. It's been the best 20 years of my life. There's no doubt about it. I've learned an awful lot over those 20 years. And I want to keep carrying that torch or banner further down the line. I'll be here for the next 20, I hope.
Steve, being that you're only about 25 years old, that's
yes,
right?
That's right.
Don't start.
As you can tell by all of the lovely black hair that I have these days, I am still quite young. All right. Anyway, let's keep moving. So my two picks, Nvidia and Ufpi. I guess I got a request control here, huh? They didn't come here to hear me jibber jabber. Let's get right to it. So interesting. I think all of us in one way or another went with kind of a consistent runner and a stock that has maybe more upside potential than the other one by way of being a little bit lower in price compared to value, or being in a very volatile industry like shipping. So I think we all kind of headed that direction to some regard. Now, as we come across the list here, we'll just quickly run through the numbers. Glenn did a nice job laying everything out. Tremendous upside potential on both stocks here. Actually, UFPI, because of the significant decrease in stock price over the last several months, let's say, maybe 6 months, has created some opportunity there. And I think you're starting to see that by way of the relative value indicator coming in at 175, I think is second highest on the list next to Micron. And it's a similar story, right? Micron has come down so far in price. It's really creating that upside potential, at least in part. The other characteristic here driving that upside potential is also that these companies do a really good job at making money, and more of it in the future. So, you've got good high earnings per share numbers, and then really nice growth rates behind that. And so, that's the other part of the equation there. So that's how you can end up with some of these 1.7s, 1.6 kind of numbers on occasion. Sometimes you get the best of all worlds there. With relative safety, we can see we've got quite good numbers here with both of the stocks, 146 and 145 respectively. Relative timing could be a bit better in terms of UFPI. Nvidia is hanging in there quite nicely, even though the tech space has been hit largely overall. And I think there's some reason for that. Everybody kind of thinks of Nvidia as this computer gaming console company where they have the best graphics engine, and they do, by the way, on the marketplace, which has become an enormous pool that they can play in. However, Nvidia is far more than that these days. They're into AI. They're into systems and chipsets that are going to be working with EV vehicles and robotics, and robotics has been a pretty hot segment of the market, actually, kind of flying under the radar. I think you don't see a lot of talk about that on CNBC, at least I haven't. So they've got their hands in a lot of areas of the stock market that I think could be big time boomers, in the future. So I think Nvidia is probably my favorite pick of any stock in the stock market, that's not already done it like a Google or an Amazon. I think this is another stock that can get to those kinds of levels in the future, really could, for the reasons mentioned. UFPI is a bit of a different pick in that you might get some leverage from, some government assistance in terms of infrastructure, things of that nature. They do a lot more than just residential. They also do, a nice business on the business front and other things. They also have about 81% institutional ownership, which I found interesting. Only about 15% is actually owned by retail. So you've got some stability there. And by the way, the biggest institution in terms of percentage is actually BlackRock. I'm sure nobody's ever heard of BlackRock, right? But they've got about 16% institutional ownership in that stock. I think that speaks highly of UFPI when you start looking about how well BlackRock has been, has performed and how wise they are with their investments. So a couple of great picks. Who cares what all those, we like to put some color to the stocks so you guys can see a little bit behind the scenes as to why we might pick some of these. But in reality, the main reason why we pick them is simply the VectorVest numbers, because that takes all this color and actually puts it to useful information, which is, how well are you expected to grow compared to a similar investment in a AAA corporate bond over the next 1 to 3 years? How safely and consistently are you going to do that? And are you rising or falling in price right now? Should I buy you right now, or should I wait just a bit until you get back above 1 with relative timing, maybe even push into a buy recommendation to get started? And I think that would be a good idea for a lot of folks. If you can sit on your hands, wait till a UFPI or an Nvidia hits a new buy, and believe me, there's going to be plenty of you don't have to try to nail the bottom. A lot of times it's better just to let it get going up the page a little bit before you buy it, and there's plenty of room to continue to run. Okay, so we'll look at the stocks here really quick in terms of the charts. Go over to the graphs tab here. I think I've already got mine laid out. We'll go to Nvidia here first. And I've got a more recent snapshot indicated right now. I'd like to jump to maybe more of a 5-year just to kind of get cooking. Nvidia has really begun to hit its stride. And a lot of folks are probably wondering, is Nvidia getting a bit high? And there seems to be a little bit of struggle with that and banter on CNBC and other places these days. The reality is, if you look down there in the center graphic, that blue shaded area, that's the engine that we feel drives stock prices higher and higher and higher. That's the same engine that you saw with Sherwin-Williams, for example. And so Nvidia is very much in the earlier stages of becoming one of those kind of performers in terms of forward earnings. Now, our EPS number is forward, and I think that's an important point to make. It's not saying that the EPS is, at that current number today. It's that's where they'll be a year from now. Okay. And so if that EPS is climbing on the chart, as you see there, that means they're going to be making more and more money throughout next year. That's not what they have done to date. It's where they're going. Okay. It's a window into the future. It's not like you're looking at a wall and backwards at what's happened, although some of that is taken into account. We do look at up to a 12-year trail, okay? But we also look at the analyst consensus estimates for the coming 2 years, and we extrapolate all that data into a 1-year lead, so it's where they're going. And so I want to impress that upon you, because if you know that, if you have an idea, and if they've done so consistently in the past, why wouldn't they continue to do it in the future, right? That's the whole idea here. So then when we come back to the more, granular look here currently, I think you're getting a pretty good buying opportunity off of a dip. Basically, the hammer that we have here, I think this is a weekly chart, if I'm not mistaken at this point, because I know Nvidia was up at least fractionally today.
Yep, that's a weekly chart.
But what you have here is about 5 weeks of dip. in aggregate. And if you look back on the chart, you're not going to find very many 5-day sequences. And when you do, what happens next? So could the stock pull back further? Sure, but what's the way to combat that? Let's make sure it gets off and starts running again. Maybe look for that new buy recommendation. We can go into the daily chart to look there. But I do think this is one that if you haven't purchased already, this ought to be a part of, well, forget my opinion. It's got some of the best numbers in VectorVest. And our founder, if you've been watching YouTube, has been talking about this stock recently as well. And he's pretty smart, so you should listen to him before me also. But anyway, this would be my pick. It looks like it's beginning to reverse. I think this pullback is most likely run its course, provided the stock market doesn't go on some kind of dramatic dip from here. I think you're starting to see the turnaround with Nvidia. I'll turn it over to you guys.
Just to add some more insight to that, in regards to that, I did a video on YouTube yesterday that included Nvidia, and there's news behind it. Dell, VMware, and Nvidia together are incorporating some better interconnectivity in cloud-based stuff. So that's going to that rides right on the back of what Steve says. There are a lot more than what people think. There are a lot more than what people think, and that culmination of those three companies getting together on the cloud basis could be really good for all three stocks, but it's specifically in Nvidia. So I like to pick. Jim, what's your name? Yeah, you.
Glenn, I like your deep insight with connectivity stuff. It's very deep insight. I like that. I have no further insight to add. Steve covered every bit that I could add on to. Yeah, I mean, along with the reasons why I like Micron, on top of everything Steve said, put it in an industry that's had a rough time and will probably bounce back. So, yeah, it's a great pick.
Excellent. All right, Steve, your next pick.
Oh, all right. Let's see here. These guys are so nice to me all the time. They don't give me any runaround.
Oh, but I get run around.
If Steve would have picked the MATX,
I thought I had them layered here. I won't go to the next one.
I got you. If you don't,
pick me up there, Glenn.
Oops.
There you go.
There you go. Okay.
All right. So UFPI would be the next one here. I am going to go to a little bit longer chart, I think, here. If I can. There you go. So now I'm looking a little bit more like Jim. I'll make him feel a little bit more welcome. So UFPI, let me go to a year, actually. So UFPI, there was some jumping on the train here, I would think, back when this thing was really running in conjunction with kind of the shortages in wood, and we saw the dramatic increase in prices of wood. Wow, I mean, just unbelievable numbers. And so, that upward rise was probably a little overdone. In other words, not over the long term, but maybe a little bit too far, too fast. And I think we've pulled back a little bit more dramatically than we probably should have here as well. And I say that because the numbers that we talked about earlier on the watch list viewer, here again is a company that makes money very consistently. That RS number is in the 1.4s. That's an excellent rating. So, this isn't a situation where UFPI all of a sudden became very profitable because of some wood anomaly, that was going on due to trying to get products across the globe moving. This is a situation where the company was already well established, already has multiple avenues of establishment, retail, business, and others. And again, I think probably will benefit when people start looking around for infrastructure plays because it's trading at such value. I'll make the same argument here that I made for Jim earlier, which is in part why I did it. But that is, as I was looking through a search we have here in VectorVest called ruler stocks, that I'm going to show here in a minute for those that stick around, this was one of the stocks, like a Micron, that was trading well below value. And when I look at situations like this, guys, I want to make this point crystal clear. Here you have a stock that ran up to, what's that number up there, Glenn? I can hardly see it. 85.
I see a high price of $89.75.
There you go. 89.75 on, this looks like about 4.25
Yep.
on forward earnings. What's the forward earnings now? Let's see if I can get that number for us.
Oh, we just look over here.
Yeah.
Earnings per share is at $5.99.
So we're trading, 30 points lower with $1 plus an addition on forward earnings. In other words, like a 20% increase on forward earnings while we've fallen back, 30% or so on stock price. That's the perfect world scenario in my book for something to hold on to for the long term. You've got more value now and 20% more value on a forward basis, and you're trading at a fraction of the price. It looks like we've got a pretty good floor built up here just below. We've had 3 up days. I think if we take out this red candle high, the open of that session, boy, it could go off to the races and easily run back up in short order to that other prior swing high right here on the chart. Yeah, right there, Glenn. Good job. And far beyond, right? Because we're trading again on more forward earnings and a lot more than we did when we hit such lofty prices here in the recent past. So that's why I like this one. And it's also a ruler stock where earnings has been going higher year after year after year, quarter after quarter after quarter, all that kind of stuff. So I'll throw it back to you guys to add something or not.
As the stock's price has been going up, let's scroll down. Let's scroll down a little bit. I think dividend is up there. Look at that. There you go. Dividend safety. You got a dividend of 60 cents. Dividend safety of 99. At rising earnings, even as the stock's price is falling back. The cool thing about what we just showed here is that from a long-term perspective, this definitely has a lot of upside. But it's the analysis within the software that's giving you that information. Just like Steve said, it ain't him, it's not me, and it's not Jim. It's the system. The system is giving viable information, not just data, viable information to help you make a decision. That stock's got good upside potential. There's no ifs, ands, or buts about it. Right? Jim?
Once again, I couldn't agree more. In fact, as you were talking, I went back into the portfolios again that we use for our retirement coaching group. And actually one of the stocks in there is LPX, which is, same, it is virtually the same.
Cousin. Yeah.
I laid an LPX graph, under the UFPI graph, and they look very similar.
Yeah.
And the fundamentals are very similar. So, again, right in the same ballpark here with these type of stocks. So we do own LPX right from ruler stocks.
I was looking at both too, Jim, and what pushed me over the edge here was the BlackRock investment there. I said, boy, those guys are pretty sharp too. So kind of a perfect world.
Yeah. All right. Great. Before you go further, Steve, because Steve is right. If you stay, he's getting ready to show you freaking an awesome deal. I want to answer a couple of questions. How often does VectorVest change RV where interest rates expectations change? Our indicators on a real-time basis will change on a real-time basis. The mathematics behind it is already in play. So to say, does it take into effect the interest rate expectations? It's expectations. It hasn't happened yet. We don't look at what could happen.
Right.
We look at what's happening. So relative value will change real time or intraday if you have intraday, or end of day if you have end of day. How are they seeing forward earnings? We give you forward earnings. Our earnings per share number is 12 months forward earnings. So when you ask the question, how are they seeing forward earnings? Danny, if you were to go look at any of these stocks and look at the earnings per share, they're going to be quite different than what you see here in the VectorVest system. So we give you forward earnings.
Well, right? Let me re-explain that one again, because the 100% answer here is, again, we use a trailing 12 year when we can find it to establish consistency so that when we look at the analyst consensus estimates, okay, now on a stock like UFPI, you're going to have thousands, if not many thousands of analysts, and they're all going to be looking at the end of this year and the end of next year, and I hate to use the term predict, but they're going to be looking at where they think these companies' earnings are going to be on at those times. And so we take the consensus number of the thousands, okay? And then we project out based upon past and future information. We extrapolate all that data down into a single number, which is a 1-year calendar lead. And we do that every single day. So you're always marching towards those forward consensus estimate numbers. And how it marches is in some way going to be affected by their past performance if you follow the drift there, okay? I can't explain it any better than that. So if that doesn't make sense, I don't know where to go.
All right. And one last thing. Again, if you haven't already, if you haven't subscribed to the channel, please hit the subscribe button, hit the bell icon. And if you like the information that we're giving you today, hit the like button. Hit the like button. Let us know that you like what you see. That algorithm helps us. All right. Now, Steve has got a little bonus for you. Steve, take it away, man.
All right, cool. So this is going to harken me back to when we used to get out and actually do live events. You remember that, guys?
It seems like forever.
But, whenever we first wanted to demonstrate VectorVest to a new group of folk, whether it be at a trade show or an event, one of the things that we used to do was have a bit of fun, make it light, make it entertaining, but also very impactful with something that we call the ruler game. The birthday game. And what it is a demonstration of all the information we talked about today, leveraging that information in the past to see if it has merit, to see if, hey, had I followed this kind of guidance in the past, where would I be today? Thereby, if I follow the same exact methodology today, it gives me some idea of expectation in the future. Now, there's not 100% one-to-one correlation, but all things being equal, if you can find something that consistently makes money over many years in the past, and then apply it going forward, your propensity to not only make money, but do exceptionally well is about as good as you're ever going to get. And some people say things like, well, backtesting has no merit whatsoever. Well, I'm going to tell you, had you done what we talked about today 20 years ago, you'd be drifting around in the Mediterranean right now on your own yacht. I'm dead serious. This is the kind of stuff, and I'm going to show you why. Okay, so I'm going to go to this little tool in here we got called Unisearch. Okay, and when we get there, oops, see if I can click it. What we can do is take a lot of the things that we talked about today. We're going to find really good stocks with high relative safety, good earnings growth rates, and we're going to buy them and hold them for the long term. Okay, so I'll come back and run the scan today so you can get a list of names. We are going to be nice, right? But what I'm going to do first is show you the efficacy of what this is all about. So we're going to look for stocks with those high safety ratings, high growth rates. That's kind of the emphasis of the search, at least, minimum, I think it's like 10 or 14% growth rate, that kind of thing. Now, let me go back here. I'm going to click on the calendar. It's not letting me, which is why I keep jibber jabbering. Glenn,
click it again.
Work your magic. Yeah, I still can't get it, bud.
Hold on, I'm working on it. Wow.
Do we have another screen open somewhere?
This one? Oh.
Well, Glenn, I can tell you where to go.
What was it? Okay, go ahead.
All right, so let's go back to December 9th of 2019. The reason we call it the birthday game is you just take your birthday, okay? And you go back at least a year, preferably longer, and we'll take a look at how the stocks that this search would have found on that day would have performed. And you can literally do this dozens and dozens and dozens of times until your heart's content, until you finally prove it to yourself, that these stocks are really a great way to go when we're talking about buying stocks for the long term. So you ran it. Look, here, these aren't the stocks we were talking about today, right? You've got Universal, Tal Education. The China stocks have gotten killed here recently, right? But Lululemon, Chipotle, CoStar, these were the best ruler stocks on that day, right? So we've got a tool at the top called Quick Test. If he clicks on that, test the top 20. You got 20 in there. Perfect. Okay. So we're December 9th, 2019. I'm trying to read the numbers there, Glenn, but if my eyes are right, if my eyeballs are working, you've got an average return on those stocks of 56%, right? That means that basket of stocks went up 56% as a unit, as a portfolio. What did the S&P go up? 38?
It looks like it. Hold on, let me make sure if that was the S&P. Yep, that's the S&P, 38%.
Okay, so not only did these stocks go up, they outperformed the S&P. And how much work did that take for me to do? Virtually nothing. All you got to do is open up VectorVest, go to Unisearch, run ruler stocks, and buy the top 20. And then what you got to do is you got to get your butt in Jim's coaching classes, and he can show you how to make it even better. Because you could have collected income on these stocks by way of options. You could have protected and mitigated downside and actually improved performance by doing that, by buying puts. And it only gets better. You would have collected dividends along the way. None of that is accounted for. This is simply how did the underlying stock price move, which is only about half the battle, right, Jim? I mean, you're going to get a lot of income and dividends and everything else along the way.
That's right, Steve. Building the portfolio is just part of it. Managing it once you have it, and with all that you talked about, is what puts you over the top.
Yeah, but even without brilliant Jim, you just buy and hold the stocks. Watch, go to a different date. Let's go back to December 9th, 2009. I'm not poking at you, Jim. Just trying to be somewhat entertaining.
You are 100% correct.
I'm not kidding when Jim's going to make this better, okay? But let's see how those stocks. Now we got NetEase, CarMax. Who would have thought CarMax was one of the best stocks to buy in December of 2009? Maybe it wasn't. We'll see. All right, make sure you quick test the top 20 there, big guy. All right, how'd they do? What is that? 599%? What's the annualized number there?
50.70. 50%
Are you kidding
a
me?
year.
Are you kidding me? I could have bought 20 stocks and gotten 50% annualized rates of return. Well, how much did that top one go up there, Glenn?
2,377%. That's Amazon at 131.
Oh my goodness. How much did Apple go up?
Apple went up 1,899%. Best stock in the world.
Yeah.
It was at $7.06.
I tell you what, I'm going to show them how good your Sherwin-Williams was, okay? Close this one out. Go back to 1996. I don't care what date you pick. Pick any one you want. I'm not even going to tell them the date.
All right, I'm going to pick my birthday. Oh, crap. I can't. I'll take the 8th.
Pick the closest Friday.
Okay.
I didn't tell them the date, right?
No, I picked the date.
Run it. Quick test. What we do when we show people is we let you pick the date.
You ready?
Yeah. All right. Did Sherwin-Williams make the list?
No.
Oh, you picked a bad date, Glenn.
Oh, yeah. How about Microsoft at $5.94 or Home Depot at $10.37?
How much is that up? 3,000%?
1,000. Oh, which one?
Any of them.
AZO.
I don't care.
AutoZone?
Yeah.
AutoZone is up 5,735%.
How much is Microsausage up?
Microsoft, 4,812%. Buy Microsoft at $5.94.
Yeah, on a split adjusted basis, right?
Yes, on a split adjusted basis.
Home Depot.
Home Depot, 3,000%.
All right. Well, I think you ought to take heed of some of the advice that we gave you today, because if we look, go to today, Glenn, what are the ones for the next 20 years? What are the stocks for the next 20 years that we want to deal with? All right.
Look at that LPX.
Look at that LPX there, Jimmy.
Nvidia.
It is.
Nvidia.
We talked about some of these stocks today.
Repligen,
It wasn't by accident. We didn't pick those stocks accidentally.
And you're
All
right.
good.
All right. ANET. And I see the people at home, I can see, and I'm kidding, but you're probably feverishly writing all these symbols down. Get a subscription to VectorVest, man. Get a subscription to VectorVest, because inevitably one of these stocks is not going to work out, and you need to find one to replace it with. So
West Pharmaceuticals there, Glenn, was right near WST. Another one I own. I love it. It's a great stock.
yeah, if you're not a VectorVest subscriber, man, you need to go to www.vectorvest.com and sign up now. I mean,
there's a special here on YouTube.
Okay.
Here on YouTube, 99 cents for a 30-day trial.
99 cents?
99 cents, Steve.
Oh my, I could buy, you know what? That cigar that I'm going to buy down the street here, I could get 20 subscriptions to VectorVest. I'll just give them out to the people that are here.
There you go.
99 cents. Give me a break. Look what this can do for you guys. It can change your life.
So now I'm going to jump on board with that. Steve talked to you about what we've done here. He also said to think about getting into Jim's coaching for retirement. And I'm going to do one other thing. We got something else coming on today that you might want to take a look at. Where did you put it? That link for, yeah. What's that for? Yeah, I'm looking about the link for the webcast. That's it? YouTube? Oh, yeah. Okay, so we have something called the Successful Investor Course as well. There's a webcast for it tonight. I believe at 6 p.m. It's a free webcast. There for you, there's a link. Joey put it in there. Click on that link to learn even more. So we've got a lot to, there it is. Grow your portfolio. 15% a year for the successful investor. Steve did the birthday game. Jim is great for you guys out there for generating income for retirement. And then for everybody else out there in the middle, how to consistently make 15% a year. Joey put the link in there for a free webcast. Click that link, join it. It's at 6 p.m. Todd Schaefer will be giving you some insight as to how to do that. So, that's it in a nutshell, folks. Again, it's live in 2 hours. Is it already 4 o'clock? It's October 6th. That's today at 6 p.m. Why does it say live in 2 hours, Joey?
Glenn, take a deep breath, bro.
Okay, I'm taking a deep breath.
Today's October 6th.
Today's October 6th. All right, listen. The link will get you to the webcast. Joe, he's right. Jim is telling me to take a deep I only had 7 cups of Cafe Bustelo today. That's all. Joey pinned it to the top as well. All right. So with that, folks, again, if you haven't subscribed to the channel, please do so. If you like the content that you saw today, please hit the like button, hit the bell icon to be alerted to new videos and new stuff like this when it happens on the fly. I want to thank Steve Chappell. I want to thank Jim Penna. It was my pleasure to be here to host this. We do this once a month, folks. So if this was your first time, every month we have a panel, and every month we have different people. All right. So hopefully this was useful to you. I love what Steve did today with the birthday game. I love the picks that we had presented for you. Even Matson. Thank you, guys. Even Matson, I like the stock, but you guys make your own decisions. Our job is to present it to you. Everybody on YouTube is all about the what. We give you more than that. We give you the why. And I think it's the why that makes the better decisions. All right. With that, Joey, you good? All right. With that, folks, thank you so much for being here. Thank you so much to my guests. And next month, we'll do it again. We'll have another topic. So until the next time, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Salam, shalom, namaste, yasu. Until the next time, see ya. All right, so what's the smile on your face?